Hello, traders. Tis I, the Rumpled One, coming to you on Tuesday, April the 1st. April Fool. The year's 2025. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and Walmal's, and that's not an April Fool. Also, not an April Fool is risk management. Always have your risk management in place so you never lose more than you're willing to lose on any one single trade or any one trading session. Maybe I should say trading session. Oh, Walmart. I'm looking at my phone as I'm doing the video. What did you say?
Oh, yeah.
Oh, okay.
Yeah, I got out of a trade. Just so everybody knows what we're laughing about.
Yeah.
I got out of a trade, and I said, okay, it's time to get out of the trade so we can go and do this video. So I got out of the trade, and you said at the same time, now it's going to drop like a rock. And I said, well, hopefully it doesn't. But guess what it did?
Well,
it dropped like a rock.
Well, actually, that's not what happened. It came down to like on like candle 3 now, and then you didn't get out, and then it came down on candle 2, and then you got out, and then it shot back up, and you were happy, and I said, yeah, but it's gonna drop like a rock.
Yeah, exactly.
And it did.
My original TP was all the way down at 90.
Yeah.
You know, and guess what it meant?
Yeah, I know.
So here on April Fool's Day, who was the fool? None other than me. But at the same time, you know what? I had my reasons. I'm happy. I had more pips in the bank than I did before the trade, so I'm not going to get upset.
Yep. And I guess that's one of those things where, you had your TP at 90, but you decided to jump out. So like you said, you had your reasons. Let the boys, girls, and non-binary traders know about those reasons.
Okay, it's pretty simple. One, what had happened was it sat there, and it was stagnant. It come down, hit it, bounce off it, and it would go come back down, hit it, bounce off it, and it did it multiple times. And it's sort of like, okay, well, one or two things are going to happen here. This thing is either going to go and break through it and break it all the way down to where I thought it was going to go, or two, you know what, it's being rejected here as opposed to being rejected down at I figured it was going to get rejected down at the 90. That's where I thought the real, support level was going to be on the 1 minute chart. And when I started to see was that, hey, well, maybe the support level at 95, which is there, if you look left, you can actually see it. It's just not nearly as strong as the support level down at 90. Maybe it's going to hold strong and it's going to run up to the double O back up to 2,900. And so I'm starting to doubt the trade, doubt what's going on, and it's a 50. At that point in time, I'm in the trade and it's a 50-50 shot, and to me, that goes back, and we talked about this last week, am I trading or am I gambling? And I took my head space thoughts to go and say, this is no longer trading. This is now gambling because I'm not in this. I'm in this trade, but I don't know which way it's going. Now you always don't know which way it's going to go, but you have an inclination. Hopefully, when you get in a trade, that statistically it's going to go in a particular direction. And now my reasons for the trade have been coming off the table, because like I said, the support level was, with a new support level was being honored. So okay, that's a reason to get out. My second reason for getting out was from where I had gotten in. I was in that trade for, when I got out, I was in that trade for 8 minutes, and it's sort of like, okay, my time is expiring on this trade. To me, if I'm in a trade for more than 5 minutes, that the trade did not materialize the way I thought it was going to trade. Almost all my trades, I'm in for 5 minutes or less. And so if I'm now at the 8 minute mark, well, obviously something didn't happen the way I thought it was going to happen. It's time to go and, it's sort of like, cut bait or fish, one or the other.
Yeah.
And it was time to go and cut bait.
Yeah, and I'll just let the traders out there know, right here where my cursor is, this is when Walmal and I were looking at the screen. And what's really funny is he he took a short, and I'm thinking to take a long. And one of the reasons I'm thinking to take a long is it's making higher highs and higher lows. And then if you look left up here, that's a return bar. You see that big bar? And I'm thinking price is going to go there. Well, it came down here first. And so I was asking Walmal, what's the reason he went short? And everything's telling me long, but he said it was just price action at the moment, right? Walmal?
Right.
Yeah.
And that's
yeah.
exactly right. It was price action at the moment.
Right.
Take the trades and continue.
No, I was just going to say, but it's interesting because this is how many times, we'll be trading at the same time in opposite directions. And it's like we can both make money. And then what happened was price broke down, and it did eventually come up and fill that or hit that return bar. Well, on the way up, it gapped up once, gapped up twice, gapped up 3 times. And so if you look here with these with this shading, this is the 30-minute. Well, you can see from here to here, this 30-minute candle got covered. And then right here, it was coming up, and what happened? It came back, took out that return bar. And then on the way down, it's like, okay, I was telling Walmart, hey, you know what? There's these open gaps, and sure enough, this one got filled, then this one got filled, and now just recently this one got filled. So the market leaves clues, but the thing is, do you have what it takes to take those trades and stay in them for it to materialize? Because from here to here is over 30 minutes. That's almost a full, an hour, somewhere between, it's like maybe 15, maybe 45 minutes for that trade to materialize. And then the same thing goes with this one. Can you sit in it that long? If not, then you shouldn't be trading, that method or use those as targets or triggers.
Right. Exactly. And I like what you said. The market leaves behind, clues. I like to go and say it leaves behind breadcrumbs. And you go and look at those breadcrumbs, it can give you a little bit of path to follow, so that you can be the guy that's out there following the breadcrumbs back home or back to profit. And that's what you got to do. Just keep on following them.
Yeah. And so like you can see here, price put in a blue stripe. Let's see, 1, 2, 3, bar 4. But it's like, would you take that trade? It's like, no, I wouldn't take that trade yet, because I've learned when price is moving down like that, it needs to establish a couple. And it's like, so the first one is like a heads up, and then maybe you look for a second one, or you let some time go by and see that you can make money. Sometimes, it might work on the first shot, and sometimes it doesn't. Here that might have been profitable, but you're like in the middle of a 30-minute, and you'd be trading against the 30-minute. So to me, if I'm trading against a 30-minute, I'm going to take my pip or two and be happy.
Exactly. And that gets back to the trade that you were pointing out before, where I thought I went short and you thought everything's short going long.
Yeah.
This type of thing where you said to me, well, why would you do that? And I told you because of what price was doing at the moment. And at the same time, I also said to you, I'm only looking to pick up a pip or two, because exactly what you said. I saw exactly what you saw, but the difference was I was looking at price action and said I can do what you like to call a smash and grab. Just go in there, smash it, grab the pip or two, and get out. But you need to be quick and get out right away. And of course, I messed up because I missed my exit point, and I got stuck in it for a little bit. And luckily, I got another opportunity to go and short it a second time. And as I said to you at that time, I got out, and it was actually like I wound up getting twice as much as I was anticipating, just because I got that second opportunity. But the thing is, if you're going to go and do that, you're going to play that game. You have to become hyper vigilant watching your screen. You can't be going and, oh, well, look at this. I meant to have this indicator on my screen, and it's not there. I need to go and add that. You're in the trade, dude. You know,
Right.
don't do that. And that was my mistake.
Yeah, and I just saw something else that, once again had this blue stripe. Now it's 6 or 7 bars ago, and I said you wait, but if you notice right here, if you draw a line, there's like a flat top, and you see higher lows, and so right here at that level, to me, right there would have been an entry, and it would have been good for about 2 pips. And then you see what happened, it smashed back down. And so when you're trying to go against the flow of the 30-minute, um, which, let's see, in this case, let me think, is that also this flow of the H1? I don't have the multimeter on this screen because this is Walmal's clean trading chart.
Sorry.
That's okay. But it's looking like you'd be going against too many candle colors. Yeah.
You'd be going against the H1, going against the M30, going against.
Yeah, you're going against everyone but M1. I got that.
Exactly.
Yeah, so okay, so now we got another blue stripe. We're got what? We've got plenty of time here, and so see right here again, this level right here. And then boom, what happens? It comes right back down again. So it's like, are you happy taking that quick pip? And now it's even pushing lower. So that's just knowing, try not to trade against the M30 or H1. Like I said, I switched over to M30, I guess, a year or so ago after running the statistics, knowing that these M30s like to cover. And so you can see here, looking at this chart, this one covered, this one covered, this one got covered, and then it's just, these haven't been covered yet. And so once again, there's a former blue stripe, and you look here, these zones, I look for, quick smash and grab trades. That one would have been worth a couple of pips. And if you do that all day, you can make 10 or 20 pips. And when you're only in the trade for a minute or less, you're not exposed to much risk.
Right. We just had news that dropped a few minutes ago, and it came out actually better for the U.S. So not by much, but it was still better. And then we got it. And the thing is, I think the market right now is in a holding pattern because we got a bunch of red news coming out, in 10 minutes. And, it's one is ISM, and the other is the job openings, jobs, the JOLTS job openings. And so, that comes out in 7 minutes or so. And I think the market's going to probably go into a holding pattern, waiting for those numbers to drop, because they're obviously the most important numbers are going to drop today in terms of economic news.
But it's funny how, setting this level, I've got it at 86.5, could have played that, I don't know, 3, 4, 5 times, in the last 10 minutes.
Yep.
See, 1, 2, 3, 4, 4 times. Each time taking a pip or two. So
yeah, so I like to go and play that. That's why I have it, because I like it to go and do into a range like this. I like it expanding 10 pips as opposed to 5 pips. It just gives me the reason why I do it. Don't like to do it that way is because gives me the